know what that sound is? That means we are live here on YouTube for our halftime report. It is 1/11/2019, and really the last week before the earnings season kicks up hot and heavy here on the stock market and the S&P 500. We've got Coach Matt, Coach Tim, and Cody. And Matt, I see nothing but darkness from your screen. I don't know if the lights are out there and you trade in the dark or not, but how you doing, brother?
That does happen every now and then.
Yeah, for sure. The old joke is when you're a trader, you don't have to wear clothes. It's optional. I get
He said
that.
he's in the dungeon today, so he doesn't want to share his face.
Oh, c'est la vie. Either
I'm
way.
in the dungeon.
All right. So Matt, let's get rolling here. S&P kind of flat. Market has been fading upward all month. And I saw a tweet that you replied to about how this is the best start to January in some amount of time. And you're like, well, that doesn't mean anything.
I don't know exactly what I said, but I said the January barometer is stupid.
Yeah.
And I don't think I said exactly that, but I meant it. Yeah, this is an absolutely fantastic start to the year. Coming into the year, we were overextended, a little bit of a range down, but got a little whipsaw. Plunge protection team got called up January 5th, and ever since then, Tim, we've been off to the races. So, I get it. If you guys want to, if anybody wants to say the January barometer is this, or that, then I just want to say, okay, did the plunge protection team exist in 1962?
Mm-hmm.
It's just a different marketplace. You got to be able to assess the market in its current condition. You can't just hope that it's going to, January barometer magically appears. And by the way, it is a trash indicator, Tim. Every market's a little different. That's number one. The market's different today than it was 15 years ago. That's number two. The market's vastly different today than it was 80 years ago. That's number three. And the simple reality is the market goes up 80 to 85% of the time anyways.
Mm-hmm.
So I mean, yeah, when the January market, 80% of the time that the market January goes up, the market goes up. Yeah, 80% of the time the market goes up anyways. The market's an inflationary indicator.
Yeah, it's not going to be a necessarily even indicator on how we end the month. It would not surprise me if the market took off and rallied, if the market was just volatile and range bound, and nothing would surprise me at this point.
You know what it reminds
me? Now for 20 years, incredible. All right, S&P 500. I was just going to laugh all day.
How do you even do the report after this?
Doji on the market, guys. This is what traders get to do. I mean, when the Doji is flat and you're theta positive and you're hedged.
A Friday in a volatile market, and you're not going to take aggressive positions into the weekend where you just had an announcement that Brexit is throwing its hands up in the air, and you got all the geopolitical nonsense and government shutdown, and you got a massive earnings season starting up, cranking it up next week with a lot of the financial companies, i.e. all these banks we were just laughing at with South Park. I mean, yeah, we're going to watch a South Park minute and a half clip making fun of the banks.
Well, I made you guys watch that Joe Rogan bit. Maybe Friday Fun Day should always start with a little short comedy skit. I don't know. I mean, whatever. Maybe we'll end on it. I don't know. Maybe we'll make that a thing as we move forward, have some fun.
I just love that first one when he's talking. And I don't watch South Park a lot, but I love that first one. He's like, and we'll put it into a money market mutual fund and compound the gains for foreign exchange accounts, and it's gone. It's just funny. It's just funny. Welcome to Banking 101 in 2019, and it's gone. S&P 500 Doji Fest, and I just want to say something, Tim, very quickly. There's a lot of people in the market that don't believe in technical analysis. Obviously, I'm not one of those. 2600 is so very important for this market right now. In the last 3 days, we've tested it multiple different times up here around that 2600 mark here.
Mm-hmm.
Hit the tick at 2599.5 here just over the night last night after the market it's coming into the close, ticked up above quite close to that 2600 level last night, and obviously it's trying to get back up there right now again today at 2595. And Tim, it's not like we didn't have a lot of news in the last 3 days in the market. We had a CPI report came out today. We had Jerome Powell giving a speech on Thursday. So you had a lot of economic activity that could have drove this marketplace.
Mm-hmm.
But the market has that top right now, and it goes back to what I was talking about with, and I can't remember where I read it from, is Zero Hedge, I believe, where you might have the Powell call, where when I gave the analogy that he sold a call instead of put a put in there. So in terms of this, 2600 is vital for this marketplace. I'm not buying anything right now, getting into swing trades, nothing until I see 2600 the market back up above 2,600 on the actual stock market. And quite frankly, I think we're going to have a lot of potential really, really, really good bearish retracement setups if we get some confirmation coming down underneath 2580, perhaps 2560 coming in into early next week. So it's going to be a fascinating scattering report meeting. Look for some bullish breakouts in those scattering reports. Look for some bearish retracements, perhaps some low basis, descending triangles. We're going to find the patterns that work off what we're seeing in the market.
Yeah, for sure. And by the way, if you're out there watching, give us a quick like and a share, as we always do at the very first of the show, to make sure that we get our word out there. Matt, the big thing with Wall Street right now is I think that we're waiting on next week's earnings, and it generally does kick off with the big banks. And we had a discussion about financials throughout the week, you and I talking about what's going on.
On that real quick.
Yeah.
When you're looking at earnings season, okay, and I'm gonna make sure I can get you a nice little I'm getting you an earnings graphic. Just give me a second.
Mm-hmm.
So when you talk about the start of earnings season, right? When you and I were growing up as traders, the start of earnings season was really, Alcoa. Right?
Alcoa was always the first one.
It was that first one. Alcoa was,
mm-hmm.
And everybody was waiting for Alcoa, and then there was some discussion like 5 years ago about Nike taking over that start of that earnings season. Do you remember that, when that was kind of out there in the social conscious, because Alcoa, I believe, was getting out of the S&P 500. Nike was the bigger company, reported about a week in front of Alcoa. And so, everybody looked for Alcoa to be the start of the earnings season. But I'm to the point now where I think it's the banks. I think it's the week that the banks start leading off, where you start really seeing earnings kick off. What's your thoughts?
I do. For me, I'm watching Citigroup, JP Morgan, those types, and really not even necessarily just the banks, but also the brokers, those types that come in and give us the result.
I kind of merge those two together sometimes.
Yeah. Well, if you look at the bright pink down here, Matt, JP Morgan, Bank of America, Citigroup, Wells Fargo, and then over on the brokers, you've got Morgan Stanley and, Goldman Sachs and those types. Those really are all going to come through next week.
FinViz pop-ups.
Yeah. It is what it is. You ranted on that one yesterday. You only get 2 FinViz rants per week.
Okay. But saying stupid FinViz pop-ups isn't a rant. That's just that's a statement. I get at least 4 of those a week.
Now you're going to trigger a rant about ranting.
True.
Right. No ranting on ranting. That's ranting violation. So in terms of Tim, continue your thought on the banks reporting earnings.
Well, and think about this. So much of the banks is sensitive to interest rate cycles and what's going on with the Fed, and because of the 10-year bond and how they set mortgage rates and all that kind of stuff. So it's a real look into the way that we understand what's happening in the economy. I remember last quarter when the banks came out and reported earnings, and I remember this halftime report specifically. Coach Mark came in and said, "Listen, guys, I've been digging into this, and there are some real problems here, and it's because you can start to understand consumer behavior from these bank earnings. It is what leads it off next week. It's what we're all going to be focused on, and I would almost guarantee it's going to dominate the headlines."
Well, just look at the financial money center banks here, right? You got JP Morgan, Bank of America, Wells Fargo, Citibank, so on and so forth. They all report the 15th, the 16th, the 14th, the 18th of next week. Every one of those money center banks. And those are the banks that I'm kind of talking about when I'm talking. I'm not really talking about your investment brokerage banks like Charles Schwab, Morgan Stanley, Goldman Sachs, Chicago Merck, E-Trade, and whatnot. I'm looking at these big money center banks. Those to me can be such a catalyst for how earnings is going to play out. And so when I'm looking at the start of earnings, look at Nike here. Nike reported all the way back in December 20th, Tim. That seems like a entire market cycle ago. I know it was only like 2.5 weeks, but doesn't it seem like an eternity since then?
Mm-hmm.
I feel like we've been through a bear market and an entire recovery in the last 2.5 weeks.
It does seem like a lifetime ago that we were before Christmas and the market volatility was so bearish. It's been going straight up.
Okay, so we're making an announcement, T.
Yeah,
we're making an announcement. Tackle traders, earnings season starts the week of the banks.
Correct. Yeah, that's when I'm starting to pay attention to it, and that's what I'm always calling earnings season. So I like that announcement. That's the standard. That's what we're moving forward with. And Matt, these bank earnings, by the way, you have low PE multiples on the banks, and I do expect them to come in strong. The only question is going to be guidance.
Well, that's the That's what's on everybody's mind right now. Forward guidance, first quarter earnings, slowing growth. It's been the chatter for the first week of the market. We've seen it we talked about it yesterday with Delta and Apple and about 10 other companies that have either released earnings such as Constellation Brands or that have pre-announced such as Delta and Apple about slowing growth. How are the banks going to perform in that? What do we see from that? I'll tell you, we're going to be here every day talking about what these banks are doing next week. And I'm sure we'll have Mark come on to give his assessment on the banks as well, because I'm not a perma bear on anything. I'm a trader, but obviously I don't like the banks. Mark does like the banks. So we'll bring Mark on to kind of give us his assessment of reading those earnings reports.
Give me a chart on a couple of these key ones. By market cap, JP Morgan is the biggest and Bank of America is second. They're definitely different types of companies. United Health also has earnings next week, as well as Wells Fargo. Wells Fargo is an interesting one because of the way that they have so many consumer, deposits and then also credit lines and whatnot. They're all going to be fascinating, Matt. You'll see those little red telephones on the bottom. They're all coming up next week. Look at these charts, Matt. They're very much in a downtrend, bear retracement like the whole market. There's nothing real exciting going into the earnings here.
I want to get your take on something, Tim. We can talk about this in a second, but this is a tool we've brought on the halftime report before, but it's a little comparison, and I'm comparing it against the S&P 500, and this will kind of show you in this recovery here, and this is one of the reasons why I'm very interested in these banks, because as the entire market has snapped back at the first of this year, I mean, we're up 10% off the lows, Tim. And what this purple pinkish line represents is the actual S&P 500 and the performance of the S&P 500. And as you can see here, look at Wells Fargo underperforming the recovery, the snapback recovery we had in the marketplace. Look at Goldman Sachs, underperforming dramatically by 10%, Tim, underperforming the recovery that the S&P 500 has had. Some of your other ones, look at Bank of America here, BAC, underperforming. Look at JP Morgan, underperforming that recovery. So it's going to be really interesting to see how the banks, which have been underperforming last year and have been underperforming in this recovery at the first couple weeks of this year, how they really respond to that earnings season next week. I think it's a very, very important earnings season in general, obviously, but in terms of these banks, I think it's vital for the banks.
Yeah, no doubt about it. I still have a very, very subtle bearish bias. I was having a conversation with a trader this morning, and he asked me, Tim, are you moving more neutral? And I said, yes, I am moving more neutral. But I have to respect the fact that we are still in downtrends on bear retracements, Matt. And
I'll most likely carry a neutral delta into the weekend.
Oh, I will be neutral in my portfolio design going into the weekend because I don't trust the weekend news or anything that could happen. There's no doubt about it. Theta positive hedge. That's my philosophy right now in the market. By the way, it's not a bad philosophy in any market. It's not just this market, but being theta positive and having cash flow in your accounts, it's a good style.
There is some techniques out there that regardless of the market, you keep a neutral delta and a positive theta.
Yeah. It's a more complex trading edge, but it's a more simple philosophy that you're just trying to build cash flow, right? And I don't mind carrying delta. In fact, I know that there are opportunities through technical analysis and fundamentals and trends where you want to carry delta and exploit it. So I'm a trader with that regard as well. I don't want to just be a theta neutral or theta positive and delta neutral trader.
Even though I'm slightly bearish on the market, Tim, and the market is obviously showing some weakness as it's approaching that 2600 level, as we've seen over the last 3 days. You're starting to see it slow down, turn around, form that circle, get you the doji, but you still have not had any degree of confirmation here on the bearish confirmation with the downward movement of price that closed underneath the low. So we've seen this play out. I don't feel comfortable carrying a negative delta into the weekend unless we get some downward pressure coming into the close, and then that will only be slightly bearish. I think it's we wait and see. We come back and assess on Monday. We use the scatter reports. We come back on Monday and we wait for confirmation in the market.
Yeah, I'm with you. Let's rapid fire through a bunch of stocks here. There's a bunch in the news, actually. And this is the fun thing about markets is that even when the market's on a doji and there's not a lot going on for low R candles in a row, Matt. We talked about that throughout the week. This week, even though it's drifting up, it's not like these are high volatility candles, but there are some companies going wild. Activision's the top loser on the S&P today. You tweeted out about it. And my family, I don't play this game, but Destiny 2 is a popular game amongst my brother-in-law, and my wife plays and all that kind of stuff. They like their video game, and
it's one of the most popular games in the world, T.
It is.
My son plays it all the time. I don't play it either. I don't know what it is. I think I logged in with him one time. He killed me, and then I never played again. But that's big news. Activision moving away from Bungie, and removing Destiny from their catalog. I'll tell you, Coach Frank, I'd like to hear Coach Frank's take on this in the market recap later today, because Coach Frank knows quite a bit about Activision, their game catalog, and what Destiny means to it. So I'm looking forward to that market recap later today to hear Coach Frank's take on it.
Well, I'm going to go gaming nerd here for a minute. And I think, because I've studied a little bit about this, I used to play Warcraft a long time ago, over a decade ago, and I love doing it. I love games, by the way. I've always loved games. The thing about it is that Bungie, is it Bungie or Bungie?
I think it's Bungie, but I'm not sure.
They wanted to have the online computer technology that Blizzard and Activision knew how to build, bringing it to their game console style game, because it was a similar type of MMORPG. And the reality is, it's not good when they split up here. They had a licensing agreement. They're moving their separate ways. We're talking about billion-dollar deals. Activision down 10% on the day. I still love the company. I still love the gaming sector. A gap down here might even be an opportunity to enter, quite frankly. Random news was not planned. This is the randomness of markets sometimes, but
let's see how the market responds at $44 to $45 on Activision.
Yeah.
That's a support level for Activision. Obviously, negative news with the market response down 10%. Maybe a slight overreaction, very similar to what we saw in Macy's, Tim, when they lowered guidance from 2.3 earnings per share to 2, and Macy's got rocked by 25%. It could be just the market has heightened sensitivity to some of this negative news, Tim, and they're going to sell and they're going to sell in the face of any negative news. But let's see how the market responds at support of $44 to $45. That's a fairly important support level for Activision.
Interesting take from John here, halftime crew. And John, you're always active. Great to see you. Gamers are rejoicing over Bungie leaving and wanting Activision to die. Could be something. I mean, I'm not in that world right now, so I don't know, but it could be something with how they execute certain streams. I'm not sure.
I will tell you what Coach Frank said. Coach Frank said that on Twitter, when I posted that on Activision last night, he said that the actual game designer for Warcraft back in the day for Activision, which is Activision's #1 brand, right? And Warcraft, that guy's leaving in April. So you have Bungie leaving here, you have that guy leaving in April. And I'm not a gamer now, T. I was back in the day, but I'm not a gamer now. I got more important things to do. But in terms of this, that can't be good for Activision. It can't, because a lot of the gamers that I know that I do talk to, they don't like Activision any longer either.
Well, and to think about how important this is, by the way, this is bigger than Hollywood budgets they have for big movies. The game releases that they have, that big one they did with Take-Two, TTWL. Let's see what happened within the sector, by the way. Give me a look at EA and TTWL real quick. Because news on one area obviously can affect others. Doesn't necessarily look like it is here today.
I don't think it's going to affect EA and TTW, because this was not industry related. This was more Activision specific related. So it's just going to be interesting to see how that works. Activision's still one of the bigger names out there. I know they've upset some of their gamers recently, but we'll see. Like I said, I think Coach Frank's one of the best ones to go to. Let's just wait to get his take on the market recap today.
I was going to ask you guys, what about people who want to be invested in the gaming sector? Would they be pulling out of things like Activision with this bad news and going into companies like Take-Two or EA?
Maybe. I still like Activision. I mean, but I'm looking at it as an investor from a raw fundamental perspective, and you've got consumer perspective here as well. And John's given us a good take. Maybe the gamers are, rejoicing this. That's not good news for Activision, Matt. We're going to have to dig in. I think we punt to Frank and we'll talk about it and dig into it a little bit later.
That's fine, but gamers aren't also investors typically.
Right.
All right. So we're going to focus on the numbers. We're going to focus on valuation. We're going to focus on revenues, earnings per shares, those types of things. And coming back to Activision, very consistent on earnings per share over the course of the last 5 years. Dividends been very consistent, if not increasing consecutively over the last 5 years. And it's still underneath its 5-year average from a PE ratio, still slightly overvalued for what Activision needs to be. So fundamentally, it's I would say it's average. Fundamentally, I mean, it's not in the rock star category. It certainly has major problems, but this is also a company that is undervalued for what it was in 2017 and 2018. It's got rocked over the course of the last 4.5 months. And yes, it's down 10% today on some very negative news on them losing some of their gaming catalog and whatnot. But again, it gapped down right to 45. And what did the market do after it gapped down to 45? The market immediately started buying after that. Look at the gap down. This is all the activity overnight off the announcement. And right when the cash open happened, they start buying. So, I get it. We want to, bury them today, but I don't think we're there yet. I don't. This is still a massive, massive, massive company, and it's still a fundamentally, I'd say slightly above average company.
ES is sitting here at 25.95, completely flat. Other companies that are down here today, Dominion, utility companies sold some of their assets. It looks like they sold some core assets. It did drop a little bit, but that's not going to grab my attention too much. ISRG is down 2-3%. Intuitive Surgical, one of your favorites, $500 stock. I say that jokingly. Sorry to bring up old bad memories, brother.
Yeah, what are you trying to do there, bro?
No, just down, but they're at a high point here. This sector is, there's a lot of volatility, obviously, and Biogen is the number one stock when I think about biotech or,
I'm still on ISRG, bro. You can't do that. You can't just rub the salt in the wound and just like move on like you didn't. Just
hey, you told the story. I'm just reminding.
Activision was one of my worst trades of all time when it gapped down 75 points on an iron condor. I was over leveraged in and got my ass handed to me. This is like five. Oh man, it might have been more years.
7-8 years ago. I think
8 years ago now. I have not traded ISRG since.
It's like old poker players, Cody. When you get that one card on the river that beats you out of the pot and busted you out of the tournament
so much.
Yeah. They only had 2 outs and they hit the one card and you had a 95% odds. That's what happened at the ISRG. Matt had a low delta.
Rookies that'll actually play a 7-2 offsuit and end up pulling like a full house or something. And it's like, what are you doing?
That's exactly what ISRG did. They have a 7-2 offsuit and they flopped nothing and then came 7-7 on the river and the turn. I mean, literally 3 weeks before earnings, they pre-announce earnings and say they're going to, do really, really bad. It gaps down 75 points, got my condor slaughtered. But, every trader has those nasty, nasty, nasty ones. And that was one of mine.
Some of the gainers here today, markets are flat. The advanced decline line's 256 against 234. That literally is about 50-50 here. General Motors is the number one gainer on the S&P here today, up almost 9%.
What's the news?
They bucked their earnings forecast and shares went up. It's GM is an interesting and fascinating company. They came out and they issued guidance higher. They think they're going to be fine. There's in fact, I got to dig in here and look at it, but that candle before earnings, it's not the earnings date here, Matt, but wow, it's their forecast is what they're saying.
Let me get this right. Apple, Delta, Constellation Brands, and other major companies have announced lowered guidance and slowing growth, but yet GM announces increased growth.
No, here's what they're saying. They're saying that even though Wall Street has projected declines, they believe they're going to beat Wall Street's expectations. They don't think they were fair assessed. Even though.
Say that again. I had to mute YouTube.
Oh, no problem. So they're saying that even though Wall Street had lowered their projections for the company, so analysts on GM have come out and said, okay, 2019 is going to be rough. I'm reading the article right here. GM came out and their CEO said that we are going to beat Wall Street expectations. We expect better numbers than what they have lowered. So it goes back to the conversation in the chat here a minute ago. The information had lowered their expectation. Their guidance was down from Wall Street. They came out today and said, no, we're going to beat that. Stock is up 9%.
We're going to beat absolute terrible expectation, and we're up 10%. Okay,
that's right.
Par for the course for 2019.
2019 in the market. It is what it is. PVH Corp is on
Hey,
the
I just had to say, what I've learned is not to invest in any company that starts with a G. GE, GM, GoPro.
Google. You can invest in Google.
Oh, I guess
Hold on.
that's Alphabet. Alphabet.
It's true.
GameStop.
All right.
Yeah.
I mean, GameStop's down.
It's a good effort, Cody. I liked where you're
I
going.
like
I mean, I will invest in gold, but that's not a company.
Yeah. Yeah, GE and GM usually have been on our down list there for a while. PVH up quite a bit, but really, Matt, next stock I wanted you to look at is Netflix.
It's been on tear.
It's just killing it.
Been on tear. Been on a tear.
Did you see Bird Box?
No, and I won't see Bird Box.
Apparently,
I'm going to be the only person in the United States that holds out on this.
how many accounts they say stream that thing? I mean, it's been rocking since that
I
news.
heard like
50 million people saw it on the first weekend.
Yeah, for like 3-4 days, like it was over 50 million people.
Yeah.
And you know what's interesting about Netflix is they usually don't release a lot of those numbers, right? Unlike Hollywood box office and whatnot. But Bird Box, they obviously felt it was good enough to release those numbers, and look what Netflix has done: 240 to 340 in 2 weeks.
I saw an article that was talking about the most valuable real estate right now is actually the Netflix homepage first fold, which they do not let anyone purchase. No ads go up there. Netflix is the only one that they put their own content right there, and it's the most seen content of anything.
I have a tendency to like what Netflix has been doing from original content.
Yeah, I have too. I mean, they obviously do not hit it out of the park all the time. They're putting so much money into
They don't,
IP.
but you know what they do? And this is where Amazon, I think, it struggles. Amazon tries to go for that creative genius a little bit,
Mm-hmm.
you know, that artistic creative genius, whereas Netflix just throws everything garbage and whatnot against the wall, and they think their consumers going to consume it. And they're right. Their consumers will consume it.
Yeah. I mean, the amount of money they give Adam Sandler to make bad movies is incredible to me. Their PE multiple is still extreme. I do understand the value of the company and where they're going, growth idea map, but that stock is just absolutely blasted off. Earnings are coming up here in a couple of weeks, I believe.
My daughter Katira does not like what you just said about Adam Sandler.
I like Adam Sandler just fine, but let's not pretend like he's been making good movies the last 10
years. He should have won an Academy Award for Happy Gilmore.
Well, maybe that's the old Happy Madison days. That's back when he was actually
still Happy Madison
for sure. Netflix is up big. In fact, they're even increasing and strengthening throughout the intraday here, Matt, heading into the weekend.
I have missed out on this entire run.
Yeah.
And obviously you're not touching this in front of this. That as a trader, we're not, but you got to get Netflix back on the watch list though. That is strength you can't deny.
The $300 break was tradable here in my estimate.
It was. I didn't, but it was tradable.
Yeah. Lennar Corporation, LEN, is also up 3.5% today. Lennar, you know, so many of these home builders are starting to show me something. I know that we have DR Horton on our watch list and whatnot. I like the breakout here. Earnings was strong. It's looking pretty good, Matt. A lot of these reversals are happening in the real estate sector and home builders.
Yeah, that was beat up in 2018. You know, DHI, Toll Brothers, Lennar. I mean, it was beat up in 2019. We talked about very concerned about those home builders. And then, you know, again, wait for the double bottom, wait for the breaking of resistance. And now you're back to being bullish and slightly bullish and tradable and investable.
Yeah, definitely. Move on to the Dow 30, if you would. Large cap index, 15 and 15 on the advanced decline line. And you tell me if you hear a theme here. Intel, Verizon, Pfizer, United Health, and Travelers are all up. So healthcare and tech. Then you've got Walgreens, Apple, 3M, Chevron, and Microsoft down. So kind of some tech, but more consumer products are going down in energy. The Dow looks almost identical to me to the S&P. They have been moving in lockstep. You've got a little doji up here at the top. Give me a read technically.
Let's add that little comparison against the S&P. Comparison. Because they do look identical.
So here's an interesting, stop for a second, because I have not used this tool much. This is the comparison tool within Thinkorswim.
Yeah, it's not the exact same because you're looking at candlestick charts here on the chart, but then it takes in a line chart on the S&P 500. And look what you're seeing here, T. Look, ever since the bear market started, look at the markets. look how consistent
Yeah.
they are. That's why every time, like when we're in this, when we're doing our market skyline in the first 30 to 45 minutes of the halftime report every day, and you're like, all right, Matt, give me your technical read on the Dow, and I'm like, it's the same as the S&P. I literally could say the exact same thing. The numbers are going to be different, and the only thing the numbers are different is 24,000 on the Dow versus 2,600 on the actual S&P 500. When you're looking at it in comparison to the Russell 2000, even Tim, this recovery in the Russell 2000. Now, obviously, the Russell you can see this, how the Russell just underperformed everything up until this recovery, Tim. And then look at it. It's the exact same. You look at the NASDAQ here on the NQ, the exact, on this recovery, the exact same. There is literally no difference in this snapback recovery over the last 2 trading weeks in the S&P 500, the Dow Jones, the Russell 2000, and the NASDAQ. There's zero difference. And Tim, that's not because people. That's all algorithms. That's all plunge protection team nonsense.
Yes, I understand. I agree. I mean, it's fascinating when you start seeing markets move together. I guess it'll even be more fascinating to me when we start to see them move apart. They're not going to move lockstep percentage by percentage forever. There are differences in the markets, right?
No,
and a lot of that
there are
does come down to sector rotation. Yeah.
There are substantial differences, but what you're seeing is everything moving in line with one another right now, at this moment. Will they decouple at some point? Will the Russell start outperforming or underperforming with the NASDAQ? Yes, they will, but that's not right now. What we're seeing is the exact same patterns, the exact same charts in every single one of those market indexes. I mean, when you look at, say, the Dow versus the S&P over the course of the last 10 years, they're obviously going to move in line with one another to a certain degree. One will outperform by 2, 3, 4, 5%, the other one, right? Same thing with the NASDAQ and the Russell 2000. But right now, they're not doing that. Right now, they are moving 100% in line with one another.
Yeah, it's fascinating to watch this whole market the last 3 or 4 months. One of the reasons why, and I wrote the daily email today about sector rotation, is to look at some of the differences. On the broad indexes, we're not seeing it. We are seeing some subtle differences on the sectors. We'll get to that here in just a minute, because I do want to talk a little bit about the financial sector and whether or not it has changed its stripes, and I'm going to continue to dig into some of that data, but let's keep working through the market. Give me intel if you would. I saw that semiconductors, and by the way,
hold on. Somebody said something. Marquis said something about, is that a kiss of death? Is this a kiss of death? Left shoulder, right shoulder. Left shoulder, head, right shoulder, breakdown, lower low, lower high. If this thing holds in this area and confirms down, historically, we could see this as a kiss of death. Yes. But it only happens if we slow down next week and see a downward movement in price. So does it have the parameters as of right now? Yes, it does. But it only is historically accurate if we slow and confirm, and history proves that. That's why a lot of us are getting ready to short next week, especially if we get negative news economically, negative news from a geopolitical situation, or negative news coming out of those earnings reports we talked about next week, which there are a gluttony of different earnings reports next week. So historically it could be, but I agree with Maria. We don't know yet. It has the makings of it, but it's still within its pattern.
You're up 300 points off the bottom. I still believe fundamentally and firmly, even from a technical perspective, you could rally another 60 to 100
That's
points.
Fine, but we're 600. That's fine, but we're 650 points from the very top to the bottom. So yeah. I get your 300-point rally. That's fine, but you're 600 points from the top to the bottom. So that's called the bearish retracement, is what you just said.
Yeah. And it still can be a bearish retracement at 2,700, man. You could rally through this 2,600 level, just like we rallied through the 2,500 level, and you can get all the way back up to 2,700, still hit your head and sell off and still be in a downtrend from a weekly perspective.
If you get above 2,650 and you go up to 2,700, yeah, you could, but there's going to be so much bullish behavior if that happens.
Yeah, there's no way.
I'm a buyer above 2,630. So I mean, I get that, but if it goes to 2,700, yeah, I'll be stock picking on bearish trades, but I'm not going to load up and hammer the bearish trades.
Yeah, I'm delta hedging into the weekend, data positive, and then we'll reassess when earnings starts next week until we get fundamental data and the reaction to fourth quarter earnings, which, by the way, one of the concerns I have about the upside is the fact that financials are leading the earnings season. During quarters of volatility, financials tend to do well. See, brokers and Wall Street investment firms usually have higher profits when markets crash. Go back and look at it historically. So I expect them to beat earnings, Matt. It just comes down to how they guide and whether or not the market likes what they have to say about the future.
We expect the majority of companies to beat earnings, Tim.
Yeah,
because the majority of companies always beats earnings, right? Yeah. So what I'm looking for is I'm not looking for earnings per shares. I'm not. They've lowered them. They're going to beat them. It's going to be. We've seen that very, very many times. I'm looking for guidance, and I'm looking for first quarter revenues or fourth quarter revenues. That's what I'm looking.
Give me a quick peek at the NQ contract and talk about the technicals on that one. There are some subtle differences on the NASDAQ, by the way,
Well, the subtle differences are that the retracement got back above its pivot point at 6,500, but in terms of this recovery, there's no differences. It's the same recovery. It's identical to the S&P 500. The only difference is the NASDAQ was in a bearish downtrend when it broke that pivot at 6,500, whereas the S&P kind of held that pivot here. So that was the only difference, was this little price movement here. It's not this price movement. It's not this price movement. The only difference was these 2 days right here, T. That was the only difference. You had some negative news on these 2 days in the NASDAQ. I am certain it was due to trade out of China. That pushed the NASDAQ a little bit further down than the Dow Jones and the S&P, which held its support levels and created a more neutral pattern with the breakdown. That's the only difference here. This recovery is identical in nature to the recovery in every other marketplace.
I agree, and as NASDAQ is rallying here, we're still in that overall bearish downtrend. You can see the moving average pressuring. Is that the 50-period moving average you have right there on the blue line?
Yeah, blue's 50.
Yeah, so we're about to hit there, and really a light range candle today. The advanced decline line on the NASDAQ is 50-50 on the NASDAQ 100. That'll tell you all you need to know about a Friday. You're literally 15-15 on the Dow 30, 50-50 on the NASDAQ 100. We got a split market going into the weekend. We're dojing. There's not a lot going on.
How many times we've seen that, T, in this last 3 months?
Yeah.
Traders don't want to carry anything aggressive coming into weekends.
Yeah, Fridays are that kind of day. Usually by this time on a Friday, most people kind of start to wrap up the weekend and head, for whatever they're planning and get ready to move on and come back on Monday morning.
I'll tell you, I after we get done with the halftime report, I'm going to walk away for about 2 hours, do some recordings, get ready for the scouting report meeting, and then I'll check the market in the last 30 minutes of the trading day before the scouting report meeting. And if I see some activity, I'll probably enter a couple of trades, but nothing aggressive.
Yep. All right, let's keep working through here. Give me the RTY if you would. Coming back up into the 1450 range. Pretty incredible rally, actually, from a percentage perspective. Small caps have led the way from bottom to top here on this bear retracement, but they also led the way down when they were selling, just more volatile in nature. 1450 is so clear on support. Matt, if you were writing a technical analysis book, you would talk about old support, new resistance here and on a doji. So I know that we're talking about neutrality, but I think it is really critical to remind everybody we're also going to be very, very bearish if that market starts to sell next week.
Yeah, again, same pattern is in the S&P 500. Snapback rally coming back into resistance. Next week's vital.
Yep. All right. Move on to the dollar index. If you would move through the currency market, I'm looking across currency pairs here. I like looking at currency futures when I'm quickly glancing at them. Gives me an idea of whether or not one is strong or weak. Dollar's up just a hair, doji pretty much. Euro's down. There's not a lot of volatility in the currency markets. The big one is the pound. The pound is strengthening against other currency pairs, up 0.9%.
What do you want me to say?
Nothing. You're the currency guy. Whatever you want. There's not a lot going on in currencies right now.
No, it's a boring day in currency.
Yeah. What's going on with the pound, though? I mean, that pound dollar cross pair.
Well, number one, there was some news coming out today that they're most likely not going to get a Brexit deal done by the 30th.
Mm-hmm.
And there was also some guy and I can't remember his name, but he was one of the guys that was funding the Brexit movement, and he came out and basically said he didn't think they're leaving today.
Yeah.
And so I think a little bit of that positive nature came out from that, with people believing that they may not be, leaving, Brexit. And Tim, you basically said that in the prediction podcast, that it was your prediction that, that the UK was not going to leave the Eurozone. And based on what we're seeing in the last couple of weeks, that's increasing probability. I mean, we still got a long way to go, but that's kind of what's happening. So the pound got lifted because of that.
Yeah, no Brexit hard out where they just don't leave and we go back to normalcy. I mean, I guess that theoretically could be good for the pound.
You'd have to have another referendum come up, which would be difficult. But I'm not a political genius when it comes to UK politics. But that's what's happening. A little bit of hope. Leaving the Eurozone is not good for the British. It's not good for the British pound.
I was talking last night with some friends over at my bowling league, and they were saying, "Oh, in the U.S., we've got the worst political system. Everybody's fighting all the time." I'm like, "Go to Italy, go to Spain, go to the UK. Politics are bad everywhere."
What are you talking about?
Go to South America.
All we do is yell at each other on Twitter. We don't punch each other in the face.
I heard a quote and I really like it. It says the U.S. Governmental system is the worst system ever, except for all the others.
Yeah, exactly. I mean, come on, get out of here. I get it. People have a tendency to overreact to every current situation that they personally see. So like for example, I hear it all the time. We're in the worst political environment in U.S. history, and I'm like, no, we're not. Are you kidding me? Back 250 years ago, they were killing each other when they disagreed on politics. We yell at each other. All right. So have some historical perspective on things. No, the U.S. is not the worst political, environment. No, the U.S. is not the worst economic environment. The U.S. is the brightest star in the universe, in my opinion.
My concern isn't political differences, Matt. My concern is that people are turning into, short takes, memes, 140 characters, and they're not putting critical thinking in. Right, left, or center. That's really my concern.
I didn't say we're the smartest bulb in the.
Tim, I can honestly admit, I think I've had an entire conversation with my best friend with nothing but gifts.
Listen, I've done that. I've had a text message war with gifts. Nothing but gifts. I like them.
All right. Let's go through commodities real quick.
Stop being old.
No, I'm going to get older and older. And even, by the way, my trend on my soul is older than my trend on my body. I'll tell you that. I've got an old soul. I don't like these. I don't like these gifts, Matt. I don't like them.
You don't like these new age techniques and toys and fun. And you're the get off my lawn.
I'll get the hose out if you don't stop. All right, crude oil is probably the move of the day, down 2%, Matt, back above 50.
By the way, guys, I will probably send Tim at least 10 text messages with memes and gifs today, and probably 14 Twitter messages today. I'm gonna gift bomb him.
All right, if you are on Twitter at Tim Justice Utah, if you can send me a gift that makes me laugh,
best gift. Best meme, best gif. Let's attack Tim at Tim Justice Utah. Everybody, Twitter, Tim at Tim Justice Utah. Best meme, best gifts. We'll come up with something to give away.
Let's make it a contest. I got an easy reward, Matt. Easy reward. I'll do a 10-minute segment next week on one of the topics. Whoever wins can request any topic they want.
15
minutes.
15 minutes. Not Monday, but on
Tuesday.
On Tuesday.
Mm-hmm.
On Tuesday of next week, the person who sends Tim the best GIF or meme on Twitter at Tim Justice Utah, tag me at Matt Justice 13. You get to pick the topic, and it could be any topic related to the financial world. 15 minutes live in the halftime show. I love it. Love it.
I don't feel good about this.
You shouldn't.
And by the way, if you guys are mean about my Bears, I'm blocking you. So
you absolutely. That is that. No.
If I get any Cody Parkey gifts and stuff like that, I'm out. I don't want to see it.
That was my plan. No.
I'm telling you right now, that ain't gonna win. It ain't gonna work.
First of all, you're not the voter on this.
I am the voter. It's absolutely. I'm the one who decides. Crude oil, Matt.
He just did an Eminem final rap battle thing on you. He said, "This is my flaw. Don't do it." And Matt's like, "Oh, that was my plan."
Listen, it's Twitter. You can't make the rules, bro.
All right. Will you bring up a crude oil chart? I don't want to encourage this Cody Parkey Bears nonsense.
Yes, crude oil here.
You know, the thing about crude, down the biggest today on the commodities, and $50 is now a new price level, Matt. It's not confirmed here yet, but if it broke below 50, is that shortable?
I think it's still shortable under 50. I said it yesterday, but it would have to be conservative. You couldn't get aggressive with it at any capacity. You'd have to. It would be more like you don't know how hot it is, or you don't know how cold it is yet, and you just kind of dip your toe in to test it a little bit. That's how I'd approach crude under 50, or quite frankly crude above 55 too. I think you got to be conservative with your approach to crude until we see a trend start to develop. Because right now, I got this back to being neutral, Tim. Is it shortable under 50? Yeah, but you couldn't target anything under 47. So you got to be conservative there.
Look at the V-shaped bottom. I mean, that's incredible to me. You know, the sharp sell-off, the sharp rally, and now where we go from here. I'm still bearish on crude, by the way.
And by the way,
I talked about it in the prediction podcast.
And I am as well, but I when I say conservative under 50, that's like 1 to 2 days in a trade. You're being very conservative with your strategy selection, stuff like that. Now, day traders will do whatever day traders want to do. They'll short futures, but no, I just think you should be very conservative with crude right now.
Yeah, definitely sitting on the 50-period moving average, but you also broke above a key level. Got some mixed information in there. Overall, still in a fading downtrend. The V-shaped nature of the whole market, though, has got traders, I think, in a loop, Matt. I've been talking to, we do this every day. And I think a lot of people are moving neutral, just waiting on this earnings season because of these technical patterns that are developing this way.
Not only that, though, T, it's when the Fed manipulates price action, it throws things around. It throws technicals around. I mean, if they would just stay out of the market, let the traders do whatever the traders want to do, let the market do what it wants to do, let the economy do what it wants to do, and treat it like a capitalism economy that it is, we wouldn't have to deal with some of this. But unfortunately, that hasn't been the case for the last.
Very libertarian take on it right there. No government at all.
Oh, Cody, is this the first time you've met me?
Did our YouTube just crash?
It did. It crashed.
Mine reset.
You'd have to reset it. No, I think we're live now, T.
Are we back?
I think we're still live. It just crashed for a second, and then you'd have to refresh.
Well, speaking of your technology, if stuff goes out, you're jinxing us here, Tim.
My whole day feels like that Joe Rogan skit. It just does.
Maybe we'll end the halftime show on that.
It's a little bit more crass than I want to put out on halftime, but I love Joe Rogan.
All right, T, we're back. All
right, we're back. All right. Yeah, we're talking oil here. Obviously, bear retracement, red candle. But here's the gain, Matt. Oil heads for the biggest 2-year weekly gain on the CL. I mean, it literally, from a percentage perspective, it is very impressive, even with the 2% down. You had a huge couple of weeks in a row. Oil has found a short-term bottom, whether that plays out as a long-term bottom. I still have a bearish bias on oil. I'm not changing that when we're below the 50-period moving average, and we're still 30% below the highs, Matt.
No, I mean, great snapback. You recovered from 1 week in December.
That's right. And Harold, thank you. The big guy says, leave my Tim alone. That's right. I love it. Crude oil down, Brent down. Natural gas is up 3%, Matt. I am starting to like what I'm seeing in natural gas for the first time.
Harold, you just reminded me of my grandma, Esther.
Harold, he's got a little bit of a kind soul in him. I'm sure he would come to my defense on Twitter if he had to, for sure. Let's see here. Natural gas, Matt, is starting to show me something for the first time in the last week or so that gets me interested here. That just volatility was just wild. We talked about it. I called it untradeable 2 months ago. 3 months ago. It's been that way for a long time. Ever so subtly, we're starting to show at least more normalcy in this market. To me, it's not all the way back yet, but I like what I'm seeing.
Let's go sell some naked calls and just get it on.
Just get the whole thing on, huh? No, thank you. I am.
I do like what I'm seeing in natural gas over the last week. I like it coming back to some degree of normalcy. And UNG and natural gas are both, I love trading these two instruments, Tim. But ever since this gap up here, I have not traded natural gas in any capacity.
Yeah.
I haven't done my naked puts or my covered calls on UNG. It's just, it got to the point where it was just so abnormal
Mm-hmm.
compared to what UNG usually does. This is UNG normally. This is UNG volatile, and then this is UNG in December and early January. So I like what I'm seeing in UNG or natural gas. I like that it's slowing down. ATRs are coming back down, and it's getting back to the point where it might be you can start doing some naked puts, maybe some cover calls on UNG.
Mm-hmm. Yeah, bring up our next commodity, which is gold and silver. Talk metals here for a minute. I love the palladium analysis the other day, Matt. Obviously, we're bullish on gold, bullish because it's in an uptrend and because of the safety play, but it's starting to fade sideways here. You could get a time correction. Break at 1300 is a trigger for many technicians. Also, a pullback into that moving average, if you get a little retracement, would also be a new trigger. Any read on gold here?
It's the same read that I had from this day and 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 this day. You're in a high base. You're overextended. It's hanging out. It's tired. The moving average is catching up to it. Wait for the breakout.
Yeah, for sure. Breaking down silver next. Gold had been leading the way, and then silver started playing catch up and really had a tremendous rally. I like this high base pattern in silver. Silver's a little bit more sensitive to the market at times. Gold's a little bit more of a safe haven, but silver's still showing me strength. What would be another breakout trigger there, Matt?
We've been saying 16 for the longest time frame, right?
Mm-hmm.
And that 16 was based on it's a historical level of old support, new resistance, and then you had one little tick up here at 1595 from late last week. But you have some very interesting resistance levels intraday that you're kind of seeing here. Now, the ultimate swing trade would be back up above this 1595 level, Tim. And if you want to be a little more conservative, up above that 16 level, but you have an intraday resistance level right here at 1578. You have another one here at 1583, and then you have another one there at 1587. Now, those intraday breakouts would be more day trading patterns than swing trading. I still believe that the ultimate swing trade would be a close above the breakout channel, somewhere above 1590, most likely above 16.
Mm-hmm. Couple of quick looks at stocks from last week's scouting report. We're going to have new reports coming out over the weekend. And by the way, it's always Friday fun day because this is when we get to start focusing on next week, new triggers, new patterns, new ideas, and updating our watch list. And Matt, AGIO was on our stock report last week. Give me a quick peek at that one. Bear retracement still in play there. WWE.
Still like it.
Still like it. PXD on the
In fact,
option.
that might be on the report again this week because it broke out this week and held its, like Cody's talked about, broke out, tested the breakout channel very quickly, couldn't get under it. Still a good trade there.
Yep. And PXD on the option report from last weekend.
Confirmation at this point has to be under 140.
And a couple of that didn't make the report, but we always tell Cody to get a couple of symbols and keep track of them. Give me a DVN.
Oh, Devon.
I think we needed the old Doji party or whatever it was we were calling it.
The Doji party. We didn't get it. We got it up until Thursday, but then it didn't want to play ball.
Still old support, new resistance.
No, the cows came and broke that one up. No party.
It's still a good trade, by the way. It just didn't confirm 4 days from when I said it would.
Sure. And then CRM, one of my favorite companies on our Poor Boys Covered Call watch list. Breakout potential up here at 150. I know that we've had a V-shaped rally.
I like a retracement and a run first.
Yeah. Interesting company. There's opportunity across the market, guys, all the time. Build your edge. Make sure that you're doing your right thing, Matt. I know that you're working on an update on our 7-step guide to analysis. We probably will have more information on that next week and an announcement about that. We're updating a lot of our content. Guys, if you're enjoying what we're doing over there at Tackle Trading and as you know how we're building things out with our halftime report and our clubhouse, I appreciate that. And hopefully you are.
next Tuesday or Wednesday, Tim, we're going to do a segment on the 7-step guide. We're in the process of updating this 7-step guide. It needed an update. the PowerPoint needed an update. So here's the new visual, creative visual for the 7-step guide. Step 1, start at the top of the market. Step 2, choose the trading strategy. Step 3, find and analyze a potential trade. Step 4, plan the trade. Step 5, place the trade. Step 6, manage the trade. Step 7, journal the trade. And so, I'm very excited. Here's another slide I want to show you very quickly, teaching a little bit of the market update. I gotta delete that. And then this is another slide. This kind of the old John Murphy slide on market cycles, updated a little bit, So I just want to show you this one. Aggressive sectors, defensive sectors. The pink line's the market. The blue line is the economy. As you see, the market will always lead the economy. The economy always lags the market. So as the market starts topping, starts going down, the economy is still growing. And as the market starts going down even more, the economy starts getting drugged down with it. I've given the analogy of the dog and the individual walking the dog before. But then we talk about, okay, as we're going through this, what type of sectors, what type of industries work best in those environments? So, and that's just step 1. So we're going to do a halftime report next week on the 7-step guide to investing, probably about 30 minutes, do the market skyline the first 30 minutes, do a 7-step little update the next 30 minutes. So definitely be with us next Tuesday or Wednesday when we do that. On Monday, that's just the market skyline sectors, getting everybody ready for the entire market. But yeah, I'm looking forward to the new 7-step. It's like I said, it needed a paint job.
Yeah, I'm excited about it. I'm excited about everything we're doing, and if you're out there in your halftime crew, thanks for being a part of what we're doing over here at Tackle Trading on a day-by-day basis. We're continuing to build our community. We're listening to you. If you have any feedback, put it in a GIF or a meme and send it to me on Twitter apparently today, because we've got a little
contest going. Got a little contest. I'm telling you, Adam Stewart might be the clubhouse leader here. I haven't seen anything yet. But again, at Tim Justice Utah, best meme, best GIF that makes us laugh, and specifically makes me laugh, not Tim, because Tim, this is a 3-judge panel, Tim, that gets to vote on this.
All right, whatever. Let's have some fun. All right, Cody, who's in the ball games this weekend? NFL games.
Oh, let's get some picks real quick.
Hey, y'all got on to me before we started this, and y'all are like, you can't say the Cowboys have a chance at the Super Bowl. Look at us now.
They do have a chance at the Super Bowl. Now,
going on the road.
Matt, all right, Indy, Kansas City.
We got to take down the Rams.
We got a steak dinner. We got to do a steak dinner here. Tim, by the way, halftime crew, Tim owes me another steak dinner. It's +2 at this point, because I took the
I'm taking one down for you making me go to that Mexican restaurant.
Not happening. Okay, you can take one down. That counts. You bought. So now it's only one. So Tim, another steak dinner, combined record against the spread, because you can't cheat and just go heads up, bro. You got to go against the spread. So against the spread, combined more. Yes, you do.
No, spread's stupid. Pick them.
It's no. It's like saying you can buy a 0.20 delta and you still get 50 delta points. No.
Okay, what is the spread?
Okay, spread. I think, and if I can.
We got Kansas City and Indy, by the way, which I think might be the game of the weekend.
NFL weekend lines. Ever since gambling is now becoming legal, now ESPN is all over it. All right, Tim, you got Indy, Kansas City +5.5. I'll give you the first one. You get to pick whoever you want in the first one.
I'm taking the points. Give me Indy.
Okay, I'll lay the 5.5. Dallas at LA. We're just going to give it the 7. We're not going to do the 7.5. We'll give it the 7.
No, that's not how it works.
There's one at 7. It's 7. Look at this. It's 7. There's 4 books at 7. There's 1 book at 7.5. It's 7.
All right.
I should bring your screen up, Matt.
Okay. I forgot. I took it down real quick. So it's like, Tim, just look at the screen. What do you think? Okay, I'll take Dallas. I'll take the points.
All right. Okay.
That's a shout out to you, Cody.
Road dogs in the NFL, but interesting.
Okay, you got this one, Tim. Chargers versus New England.
Ooh, what is the line? 4?
It's 4.
I'm laying 4 with the Evil Empire.
Yeah, I was going to say, if you made me cheer for New England, I would be so upset with you. I will gladly take the points in the Chargers on the road. Dude, the Chargers, they are road warriors because they don't have a hometown.
Okay.
Next, Philly at New Orleans. Does Nick Foles continue the Nick Foles magic? 4 straight games. He was an underdog in the playoffs, won them all.
I don't
3
care.
last year, going to the Super Bowl. You're gonna lay the 8.
It's your pick, not mine.
Oh, I'm taking fly Eagles fly, baby. Yes.
Right. So I've got the Saints. I've got the Patriots. I have the Rams, and I have the Colts. Right.
And yep, I have KC. I'm laying the 5.5 with KC. I'm getting the 7 with Dallas. Keep a track of this, Cody.
I should tell me that before you started.
I'm getting the 4 on the Chargers, and I'm getting the 8. So I got 3 dogs here, T. I feel good.
Sounds good. All right, guys, enjoy your weekend. Get in the game, tackletrading.com. Enjoy some football. What's your favorite snack over football, Cody?
Oh, I'm actually, as soon as I leave work today, I'm gonna go buy me a brisket. I'm waking up early tomorrow, considering and I'm gonna be smoking that thing.
In Hawaii?
You know how difficult it is to find. I had to find an actual meat market to do it, or I have to grab a buddy and go on post.
Especially good old Texan like you. You're very particular about your brisket.
So you have to have brisket. Why don't you just do Kahlua pig and become a Hawaiian? Come on. I mean, you're living on the island.
No, I'm going to smoke a brisket for football. I'm watching the Cowboys.
Get some mac salad. Get some mac salad with that brisket. Go down to the shrimp truck. Get a good mac salad. Have you had that yet?
Yes, but the shrimp trucks are an hour away from where I live. I'm not driving up there to get some shrimp.
What about malasadas? Have you had malasadas yet?
Yes, had malasadas.
Where from?
What's that?
Make your brisket and call it good.
All right, brother. All right, guys. We'll see you on Monday.
Later, guys.
Later, guys.